That's right, Mr. Gorbers. You can just type the questions there. I'm obviously going to talk about it so that everyone can hear what's to be said there. Mr. LC, of course, you can switch the device as you wish. Mr. Muraka, I don't know the Forex broker killer personally, but yes, from social media, I've been seeing him around. So I can't tell you much about him. All right, 3 minutes to showdown. Mr. Gorbers, I don't know Mr. Clint, but I'd love to look him up. Hansen, can we analyze indices? Indices. Let me see what I have on that. So guys, this is Telegram. This is where I basically update everyone. All right. So if you're not already on Telegram, you're missing out because this is where I do my analysis. This is the class. So I'm not gonna be dwelling on analysis as much. I'm more gonna focus on the strategy. How do you think? How do you make decisions in the market? And a few concepts that you need to understand about risk management, how you handle yourself within a trade. So on Telegram, I make videos every week where I discuss something I'm seeing. All right. So an index is how do I say this? It's a compilation of companies. So it'll be like the United States top 500 companies, and they would form one big stock, and that's an index. And then you can then start trading those. But also you can go to individual stocks and start trading them. Just like now, I have the Tesla. I analyzed Tesla and I wanted to see what would happen. So I talk about what's happening and what I'm actually seeing in technical terms. So if you click there, it'll send you to YouTube. Welcome to the Market Insider. I'm your host, Somo Time. And in this episode, we're looking at Tesla, the motor company. So let's take a look back in history and what has happened and what we could possibly take from this.
So back in 2018, in August, they reached a beautiful high of 386. All right, that's before the sellers came in and started selling off this market, taking it all the way down to the 250s mark, where they found some double bottom support, and the price then went up all the way to the 370s price. They then got themselves trapped in this downward moving wedge. All right, and the price just kept on going down. So these are some aggressive sellers. They even broke the 2018 low, which we thought that they would never ever do that. Tesla should not be worth less than $250 per share, but it is. Right now we're running at $211 per share price. Listen, this is a very strong company as we take a closer look to it. So the sellers came in around about the 338 share price. All right, this was the latest bear in the market. So the market fell from that price all the way to the 211 price, and we first experienced our first buyers in the market here on the 2nd of May, where we had expected that having the RSI in an oversold market position would attract a lot of buyers because the price is considered very cheap in this area. So we expected that the bulls would come in, start pushing the price from the 245 price mark and seeing some bullish movement, but that hasn't happened at all. The sellers are just out of the way. They just keep selling this market. So we are still experiencing a downward momentum where we've re-entered the oversold market condition once again. So right now the question is, where are the buyers? When are we gonna see Tesla moving back up? And I believe that Elon Musk has a strategy for his company, obviously. So I believe that I should start actually buying into the company right now because it's extremely cheap. The share price has dropped from all the way from the 370s into the 211 pricing. You know, that's more than 100 drop in price. So I would love to go into this trade right here. So I'm still waiting for the RSI to start pushing back up, showing me that there's some active bulls in the market, because this last bull that we had here didn't do so much for us. You know, he let the market sip right under him, breaking the support that we thought would hold for us there, and the market continued going down. So we're waiting for another comeback, see if they'll break through this two purple resistances. And if that happens, obviously I'm on a bullish bias. I want to buy. I'm looking for all buying opportunities. Now tell me, what are you doing? What are you doing with the Tesla share price? Are you gonna buy into it? Is it cheap enough for you? Or do you think they're still going to suffer? They're still going to lose value? Tell me what you're doing. Leave me your comments. And that's it for Tesla. I'm your boy, Silver Fulltime, and peace.
So yeah, I post videos like that on this channel here. I just send links to everyone. Here's the channel. So I post trading ideas and I talk about the market so that those that are already trading and have some technical experience can actually start looking at what I'm looking at and make money through what I am looking at. So you can see that I'm trading the same currencies that I'm putting out there. So I'm making sure that I'm keeping you as updated as possible. Okay, so I post every week and I update every week. So this is where you want to be. All right, so I spoke about oil. Where's oil? Here's oil right now. And as you can see, oil is my highest payer right now. So it's not about what you trade, it's about, can you find the opportunity with the strategy that you have? Can you read the market? That's the question here. Can everyone hear me? That's perfect. That's perfect. So the beautiful thing about the videos that I'm making for you guys, these are not signals. This is better than a signal because then we get to discuss what we actually seeing every week, okay? So in technical terms, if you come to my beginners class, you'll get to know me very well because I'm a swing trader, okay? So my trades are medium to long-term based. I like riding out the market and actually making some proper money with the least effort. So you've got different types of traders. Those that want to make money today, which we call day traders. Those that want to make money now, called your scalpers. And you've got your long-term traders that we call investors, obviously. So these are all different types of trading styles and obviously different types of psychology. So for someone that's working, someone that's busy, because I don't believe that everyone is just sitting down and focusing solely on trading, okay? So you want to make sure that your trading plan allows you to live your life and still earn the money. So as you walking, as you talking, as you driving, as you sleeping, the money is working, you know? So I find that day traders and scalpers suffer because they have to live most of their lives in front of a screen. Imagine that. So I gotta spend hours looking at the screen because I can't leave the screen because I've taken such a big trade that any negative can kill me, can blow me out. So I don't have peace of mind. I am not gonna leave my screen. All right. I once went to the toilet with my laptop because I was scalping. So I don't know how scalpers do it. I think it takes a brave heart to be a scalper. So I'm gonna be teaching you how to be a swing trader, how to plan forward, how to live your life and still trade. Are we all ready? All right, let's get it started. So I'm gonna choose a random currency pair. This one, Wacom Art USD. So this is a naked chart. When someone refers to a chart that's naked or they do naked chart analysis, it means that they're basically not using any indicators. So they use things like trend lines. Let me just zoom out there. They'll use things like trend lines, as I would do here, to basically read the market. Here's one here. So the basic concept of the trend line trading is that we're looking for areas where the market is connecting points where it's either going up or down. So this would be a trend line. So as a buyer, you're basically buying the market as it's going up this way, all right? Waiting for the time when the market actually breaks out on your trend line like it did here. Like it did in this area here. So when this happens, basically all the buyings are done and sellers come into the market and the market starts falling, all right? So we always buying until the selling happens, yeah. So here I'll be taking all the profits or all the buy positions out of the market and start selling the market. So this is called naked chart trading, and it takes a good eye to be this type of trader. So it takes a lot more practice. So what I've devised is I look through all these indicators and try to figure out which indicator is closest to support and resistance trading, to trend line trading, so that people can develop faster. So I found that that indicator is the relative strength index. So I'm just gonna load it on. All right, everything is default. You're gonna use 14. The levels are 30 and 70. They're also default levels. I just like writing this comment in so that I can remind myself. Obviously, I don't need reminders because I've been trading for so long. My God. So you guys should write this down for yourselves. And all I have to do then is click OK. And this is the RSI here, the Relative Strength Index. So the rules are basic, are very basic. Let me just zoom into this. Okay, so I'm zooming into the RSI and I want to show you how it works. So here we've got that 70 mark and we've got the 30 mark. All right, so we've got 32, 0, we've got 72, 100. The area here is known as your overbought zone. We're gonna make it red. So this area is called the overbought. Then this area down here is the over. Oh my God, what's happening to my spelling? Sold zone. We're gonna make this green. There we go. And then I'm just gonna highlight here so that I'm very clear about what I'm saying here. All right, so we've got an overbought zone and we've got an oversold zone, okay? And you can see here that the notes that I've put myself is that I'm looking for buying positions in the oversold area. What this basically means, when we say oversold, we mean things are so cheap. The price here is so cheap that it's attracting buyers. I'm quite sure everyone loves buying things on a special. When things are actually cheap and you can afford them, that's when we want to buy them. So every time the RSI steps into the oversold area, just like it did here, and steps out, I'm looking for buying opportunities in that market. Okay, just like they came in, they went out, I started looking for buying opportunities, and I probably made money through this. All right, same day. All right. Now, the same applies to the overbought area. Now, when we're saying something is overbought, we are saying that it's so expensive that if I had this product, I'd want to sell it because I'd make so much profit from it. So this is showing us that there's a lot of buyers in the market. They just love buying. So you need to do what? You need to sell. If someone wants to buy something, you sell it to them. If someone is selling something for cheap, you buy it from them. Is this clear so far? So we're all on the same page. We're all seeing this MT4 platform here. Sorry for those that are late. I don't know why you're late. You're missing out on some good talks right now. All right, I'm seeing those responses. I'm loving it. So there's two areas. This what we call this indicator, the RSI, helps us identify those points within the market. So the white space that I left out here is for us not to care. Anything that's in between, I don't want in between markets. Because if I'm in between the market, this thing could either go up or down at any point with no warning. I don't need that. So I want the market when it's really expensive or really cheap. because I stand a better chance of making more money because I've got it right at the bottom or I've got it right at the top. Okay, let me shrink it so we can take a look at it properly. Okay, so we're gonna take a look at this guy here. All right, so the RSI came in, dipped in, and jumped out here. Okay, so I'm gonna take this vertical line and I wanna find the point where this guy here first came out so that I can identify which candlestick I would have went with here. So this one is still down there, nope. This one is almost out there, so nope. Yep, this one is out there. So let me zoom in more so that we can all see that. So if I was here, this guy would still be in the overbought zone. I don't want it in here. I needed to go in. So this was a signal. So this told us, hey, keep an eye out on AUD USD. They might be going up, okay? So we don't react until this blue line moves out of the zone. So they need to move out of the oversold. And if they come out, we're gonna react with a buy. So let me move the line here. Was it this guy? No. Looking at it there, we can see that nope, it wasn't this guy. This market was still deciding whether it wants to go out or not. All right. Then we moved on to the next candle, and then we noticed that yep, they're out of it. All right. So it means your trade should have started with this guy, which means I would have had my buy order right here, and then as soon as you have your buy order, so we're buying here. All right, so I've had a buy order at the 0.70729. All right, so obviously when I'm here, I would need an area where I could possibly put my stop loss. So all I have to do is look from the point where I started trading, because everything on this side wouldn't be here. Let me just wipe it off actually. So we're gonna assume that everything on this side hasn't happened and we don't know what's gonna happen here. All right, so we can only see up to where we are right now. So I'm gonna take the point that I'm looking at and look backwards to the left and find the lowest point before this thing goes back up. So obviously that point is this guy here. All right, so my stop loss would be sitting right over here. Okay, let me delete the block. All right, so this is where my stop loss would be sitting. Let's write it in. Okay, I'm then able to calculate my risk, because the distance between this and this is my risk, what I'm willing to lose in the market. Let me make that a lighter color for you. So this is your this is so this whole area here is your risk zone. So say the market turned from here and started coming down like this, it means you would have lost your first trade. But since it went upwards, you started making money. So the rule is that if I'm going to risk anything and I'm expecting a reward, we should always make sure that we're risking one to make two. That's the minimum. Otherwise, you're losing. Otherwise, you are losing. You're not making any money on this trade. Okay? So I want to make sure if I lose, I only lose one. But when I make money, I at least make twice as much. So I've got this tool here called the Fibonacci. All right? So if I drag this thing out from my buy position, which is here, to where my stop loss is, let me just adjust that right there. It will automatically get the take profit for me. So I know that I need to kill off this trade right here. All right, so TP does stand for take profit. You see? So by all means, if anything, if I saw profits within this area, I'm not interested, because I need my money to be twice as much as what I have risked on the table. So I was looking forward to making twice as much. All right, we can test it out. Look at this. So this block is 1, so this is the risk. So by the time I'm here, I would have made the same amount of money as I've already risked here. So I'm still waiting to make at least 2 times that amount, as you can see. So this is truly 1:2. I'm risking 1 block to make 2 blocks. All right? Those that understand pips, if you don't understand pips, you need to come to my beginners, baby. You need to come to the beginners. So if I calculate the distance for my risk zone, the number in between, the number, that one that says 167, that's what I'm looking for. So my risk zone is 167 pips wide, all right? But it's not 167, it's actually 16.7. So you drop the last number, so you add a comma. All right, so obviously I'm expecting if this is about 16 pips, then this should be around 32, 33 pips from here. So let's test that out. From here to the, 32. Wasn't I right? Okay, so I need twice the profit, and that's minimum. That's a minimum rule. Listen, this thing still went up, right? And if you followed the rules with the RSI, which I'll talk about more, you could have made more money by holding on longer onto the trade. But the rule says that if I make at least twice my money, I'm happy. Anything less than that, I'm not happy. All right, as long as you promise me you'll take at least 2 times your profit, I know that your trading strategy is really working out for you. Okay, is everyone on board with me? Do you guys see what I'm talking about here? Thank you guys, thank you. I've been teaching for 3 years now, and it's been an honor when JP called me and told me, come do this for my people. You know, so I'm loving this. I love teaching. Okay, so we looked at the buy position. We've been looking at a buy position. So I want to look at this guy now, okay? Because he's a weird one. They came up and they said they're going down, and then they came back up again and then said they're going down. So we've got 2 signals here. Signal 1, signal 2. Right? So remember, if I'm buying, I'm expecting that this RSI will move from overbought and get to the oversold. And if I'm selling, I'm expecting that the RSI will move from oversold back to overbought. And this should be the cycle continuously. This should happen all the time. And if some weird things happen, and they do happen in the market, I also want to be ready for it. So doing this for yourself once a day, before you sleep or early in the morning, helps you really prepare yourself for any trade. So this is called back testing and really strategizing and learning how your trading system really works. And it's a beautiful thing, all right? So we're looking at this one here. It's saying that sell here once and sell here twice, you know. So they were supposed to go 1, then 1, 1, but here they went 1, psych, came back, they're like, try again, and then they went. Then they finally got there after some time. But I'm sure we've already made a lot of money through this trade. So yeah, coming back to the buy order, I said that take at least twice the amount that you're actually risking, all right? If you're a swing trader and you're able to see that the market was still gonna continue, or if you wanted to be a little greedy, which is not a problem, being greedy with a strategy is really not a problem. So if you wanted to be extra greedy, you would have moved your stop loss towards the profit area, so that even if this thing comes back, it doesn't take all your money. So at least take half of your money. And then you would have let the market keep going. And when these guys entered the overbought area, which is here, so as soon as they entered the overbought area, that was your signal to kill all the buy orders. Cash it in, baby, take it in, all right? And if you did that, you can clearly see that, come on, block, there we go. You can clearly see that you would have made 4 times what you've already risked. So if you're risking $10 in this 16 pips, you would have made yourself a good $40, which is brilliant, all right? So you've got 2 options. You either take profit at twice as much, or you wait it out with the RSI to get back to the next zone, to the opposite zone. So this would be an extended take profit. Okay, so those that fear what could happen, please just take your profit here. Don't wait it out. If you're not used to it, don't wait it out. Okay, so let me just shrink these lines for us real quick because I still want to keep the example here. So we can all see that this trade took profit right here on this bar here, right here. So this is where the take profit got hit on this. So you can start calculating how long that actually took for you. All right, all I have to do is change the properties here, make sure it's not drawn as a background, but an actual foreground. So I can see the trade started on the 3rd month on the 20th at 4 a.m. Okay, and the trade ended on the same day at 8 p.m. So it didn't even take too long. It just literally took half the day and you already made your money there. All right, then we can move away from this guy and start focusing back on the RSI. So it came into the overbought area and we're looking for sell opportunities. So this was our alert. Hey guys, look for selling opportunities. All right. So we waited for it to move out. Was it this guy? Yes, this guy was the guy that told us to sell because they went in and they came out. So right here, it's telling me that this guy initiated your next trade. So basically, I'll then put my sell order right here. Okay. Then from this guy, I'll then look for the highest point. Was it him? Nope, this guy was higher. So this is where my stop loss would be sitting. Okay. I then take my tool back, take it from my entry to my stop loss. And then it told me that to make twice as much as I'm risking, I'd need to take my take profit over here. So that means from my entry, which is here, to this area here, I'll be making double what I have risked in this area up here. Okay, now obviously this trade gave you a bit of profit and then came back and got your stop loss. So here's your stop loss up here because we are in a sell trade, and here's your take profit here. Let me just shrink this down. It's too big. It's all over my face right now. I hate this. All right, so here's our risk zone for this trade here. And that zone was actually 26.4 pips. So 26.4 pips. So that was the total risk, meaning I'm expecting that by the time I get here, I'm at least making around 52 pips worth of money there. So there we go. So it all proves itself. So if you use this tool, it'll automatically give you the double of what you are risking. Okay. So obviously this trade didn't work out. So you're currently running on a loss here. So I'm just gonna shrink it down. All right, so don't worry guys, I'm gonna take some questions in a few minutes just to make sure that we're all on the same page. All right, but just hang in there. I know it's a bit too advanced for some of you in here, but for those that have been trading, you can actually see what the hell is going on here. All right, so I'm gonna need this lines again. This is where the trade started. All right. Delete. So this is the sell. This was the stop loss. This is the risk area, 26 pips. All right, so risk zone, that's what we're talking about there. And obviously we expected that we would take our profit down here. So this trade failed miserably and your stop loss got hit. So you'd have lost some cash here. Let's say maybe, just for example, I wanted to risk $10 in this trade. So right now I'd be sitting with a minus $10. And that's what I'm talking about. All right. The RSI then comes back after fooling us and telling us to go down. They then come back into the zone. All right. Giving me another alert to basically look out for a sell. And this actually happened. See there, we're out. So it happened because of this guy, which is the same area where I just actually lost my money. But you know what? This is the market, so I'm gonna take my loss and still stay true to my trading system. So right here would be where I want to then activate my sell number 2. Okay? From cell number 2, the highest point would be this guy. So this here would have been my stop loss. All right, we then take our tool, measure from the cell 2 towards my stop loss, because that helps me identify my, where are you going? Come back. That helps me identify my risk zone. Okay? And then automatically identifies where my take profit should be. So this here, down here, would have been the area that I was waiting for to take my money. So this guy here was the one that took me out. You know, that said, hey, you just been paid, baby. You just been paid. So I took my money down here. Okay? So the rest is history. It would have been nice if I made more money, but hey, I'm not trying to be greedy. But I'm not saying you can't be greedy. You can be smart and greedy. So if you practice enough, you might learn how to be greedy in the market. So this guy took us out right there. Then I can shrink you down. Thank you. So obviously in cell number 2, I would have risked double what I initially went in. So my risk here was $20. So obviously by the time I hit profit, so I lost my first $10 in the first trade and I was expecting to make $20 here. Okay, so I lost out on the $20 opportunity and lost $10 because of that. So I'm saying, hey, listen, if I lost this $20 opportunity here, I want to make it back in the next trade. So I'm going to risk what I should have made in the previous trade in the risk zone. So if I was supposed to make $30 here, I'd put $30 risk here because that's the money I was supposed to get in the first place. Okay? So if I'm risking 20 here, I'm obviously expecting to make a beautiful $40, which I did. So that took me 2 trades, and overall, I've been trading from the 20th at 9 p.m. and all of this ended on the 21st at 5 p.m. So that was a duration of just about a day or over a day. That's how long this trade took. And you actually had to place 2 trades and manage the trade twice. This is called trade management. All right, what I'm doing is I'm managing the trade. I know that I lost, so in the next trade, I need to make back what I should have made in this here. So I didn't waste my energy on this trade. All right, so that when the next opportunity comes, I can recover my loss and still make more money. So basically now if we bring the numbers together, we've got a minus 10 on our account and a positive 40. So in total, we have made ourselves in a day $30. $30. Okay? So, time for questions. Who's with me? Who's lost? All right, perfect. At least we're on the same page. So sometimes it doesn't take just one trade, because this was one trade. You just had to buy once and everything just worked out beautifully for you. Here you had to actually do it twice. You had to manage the trade 2 times. The tool. All right, I'm gonna promise you I'm gonna make a video specifically to show you how to set up the tool. Is that cool with you guys? I know if anyone is trying to do what I'm doing right now, they're seeing a completely different tool, right? I promise, Mr. Corbus, the tool is coming. Jamie, it's coming, man. Promise. Okay, so using this, I'm basically just trading the RSI. I'm using nothing else to confirm my story. I basically don't care right now about the market. And remember, we spoke about naked chart trading, where I'm drawing trend lines and all of this to help me identify when the market is about to come down. Okay, so that comes later. That comes after you see the bigger picture. You see how to enter the market, because that's very important. People don't know they don't know where to start the entry form. They don't know where to put the stop loss. So what's the point of moving on with the cross? So as soon as everyone is comfortable, and I've already made a video about trend lines, so you should go watch it. So this plus trend lines is a very explosive system to use, guys. Trust me, trust my money, trust the bank account right now. All right, so if I was using trend lines here, all I've done is connected this guy to that guy and made this. And here I would have known that, listen, we just broke out of the trend line. So obviously this market could have continued going down because it was going up, and here they failed and it went down. So I would have held longer to this trade and paid myself 4 times what I've started risking. Makes it easy. So listen, I was shocked when I opened the RSI. I'm a naked chart trader, so I don't need indicators. But this indicator, with my knowledge, together we just started making miracles happen in the market. All right. So I'm just gonna zoom out. Look at a few more examples. Oh no, I should have taken a screenshot of that, you know. Let me do that and send it to everyone. So I'm gonna save this for you guys. Save as picture, that's it. Yeah, it's fine. All right, so I'll send it through on Telegram. Everyone should just get it from there, because I am gonna delete it later. I like keeping the Telegram as clean as possible so that you see all the important things first. So obviously only the guys that attended today will understand what the hell I just posted. So yeah, let's delete all of that. The picture is saved. We can keep that. Overboard. Oh no, that's fine. Oh, there we go. I'm just gonna zoom out. Don't panic. So I'm just gonna use this vertical line so we can look at every time this has happened. So here we got overbought. The market fell out, and you can clearly see from here everything just crumbled down. So that's money for us, and that's already 2 times our profit. There we go. Here we had a sell signal. They came out, yeah, right there. So this was our victim. Let me maybe zoom in better. All right, so this guy was our victim. So we took the tool, put it here, measured here for stop loss, and it went up, didn't pay us, came back, hit the stop loss here. So we lost 1 trade here. So I'll just put an X here to show me that this guy kicked me out. So since this area here was the last signal we ever got and nothing else has come through to tell us, I'm gonna keep buying this forever. So all I had to do now is just adjust my stop loss from this level that I'm currently at to the new level that we are at, right? Then it will also adjust my take profit area. So after the second trade, we took profit over here. Okay, let's keep going. Here's another one with a double dip. So they gave us a signal here. We took our tool, we measured from here to down here. So we were trying to buy this market. It went down, kicked our stop loss, and then came back into the RSI, meaning that we had new entry pricing. So our new entry price was this guy. So we moved our tool from here to that guy there and put the stop loss at the lowest, which is this guy. Let me get rid of this and that. All right, the market then respected us, paying us twice as much to even 4 times what we put into the market. So this is something that happens all the time, and it's a simple tool that you need to know how to trade and get accustomed to how it actually works. Okay, so let's keep going. Here's another one. They came into the overbought area, gave us a sell signal. This one didn't work for us. Our stop loss would have been here. So already you can see the quality of the trade. This is not a high quality trade. We are not used to making such small movements. So already I could have told that, I'm probably gonna lose this one, okay? And then they kept going and they came out again right here. So this would have been my new entry, and the stop loss would have been right there. They then hit the stop loss and then came back down. So I would have just made an adjustment to my trade, put it there, and made an easy 2 times that profit. So it keeps happening. It's all about how you manage the trade, honestly. The strategy can work on any currency pair. So all you have to do is go open an indice, go open the CFD, go open whatever you're looking at, and then open the RSI and see how the market is reacting to it. Okay, so the story continues. I could show you 100 examples where the market just keeps just wanting to pay us. Okay, so it happens all the time. So all you have to do is time frames. Okay, I'll talk about time frames very shortly because it's actually a very serious topic actually. All right, so I'm happy right now with the stochastic, with the RSI, I mean, and how you should actually be trading it. So I do want to talk about time frames. It's part of things that I was supposed to talk to you about today. So let's talk about these time frames and what they actually mean for people. So we're gonna talk about the time frames. Basically, we're talking about these things up here, where it starts on 1 minute, 5 minutes, 15 minutes, and goes all the way up to the monthly. Okay. So let's talk about these time frames and what they actually mean, and which ones make a better trader and which ones don't make a good trader. But this will all be open for speculation. It's all up to you and what you want to achieve, basically. So I'm going to use Excel to illustrate this. So we've got the M1, then the M2, M5 I mean, M15, M30, H1, H4, D1, W1, MN.
Yes, I only have 10.
So there are 4 types of traders in respect to the time frame that they trade. So that's what we have, 4 types of traders in respect to time frame. The first one that I want to introduce you to is a very short-term trader. This is a guy that wants to make money now, okay? So the people that do trade fundamentals and trade news are basically trading what we call a volatile market. So it's a market that wants to shoot out now and they want to make really quick money. So the first group I'm going to talk about is for those guys, okay? And these are the time frames that they should be using in order to have a good look at the market. So the first group loves this first 3 categories. So we're going to make them yellow. So these yellow guys here are called scalpers.
Yes.
All right. So these guys are trying to make some quick cash, quick money. All right. They don't like staying in the market too long. So obviously they spend way more time in front of the computer and the pips are less. All right. And they aiming for less pips. So they usually have to compensate for pips in terms of volume. So let's talk about them.
I really think
So pips are low and risk is set to be high. Okay, I think volume in terms of volume, not just risk, volume risk or lot size. All right, so those are scalpers. So they have to depend on low pips and make as much as they can. So they usually need to use a higher risk size onto their trades. So instead of using 0.01, these are the guys that love using things like a full standard lot or a 0.50, which is like $5 to $10 a pip, which is quite a big risk. I mean, look at this. I'm looking at oil and I've sold it with 0.01 and I'm making $50 out of that deal. So imagine someone that's using a full standard lot like this. They're making or they facing 100 times what I'm looking at. So if I use this, I would have been making 100 times this. So I would have been looking at $5,000 profit on that trade or $5,000 loss on the trade. Okay, so there we go. Let's go back to our Excel sheet. Okay, so these are scalpers. They love the 1 minute, 5 minutes, 15 minutes because they're looking at a very small picture of the market and they're just trying to capitalize on those small movements. The next group then loves trading from the 15 minutes all the way up to the hour. Okay, so these guys are called your day traders, right? Also known as your intra-day trader. There we go. So let's make them green. There we go. So your day traders look at a bigger picture. They're looking from the 15 minutes all the way up to the 1 hour. So these guys are trying to make profit within the same day. All right? Make profit in a day. If they're pushing it, they'll probably go for or two. All right? So that's what they're looking for. So their pips are low to medium. Okay, and the risk is the same, low to medium, or actually medium to high. That's more like it. So because they want to make money within the same day, they also have to use a bigger lot size to help them out within the market, right? Because the pips won't be that great. They are better than a scalper's pip target, but they still not that high, okay? Then I'm gonna bring you into my world where we love trading anything from the 1 hour all the way back to the daily. So my clan of people are known as the swing traders. Make that orange. Yeah, I like that. All right. So the pip range here, just copy this pip risk. I know I'm typing it all out. Right, so these guys want to make profits within a week. All right, or two. Okay, so obviously they're looking into pips of medium to high. Okay, so these guys from swing trading, usually the news don't really affect us negatively. Swing traders can almost make it out of any market condition. So these guys are prepared for a big picture. So I mean, I'm looking at a daily time frame, right? I'm looking at a very big time frame, and I'm having very big plans here, and I'm targeting very big pips. Okay, so my risk here is usually low to, should I say, medium to low. Okay, so there we have it. Then the last group of traders are your Warren Buffett and all these guys that love the stock market, and obviously they called investors. Right, and they want to make profits within I keep doing that, a year or within a year or some months. So these are the guys that would have that would literally have a trading plan that would last for 3 months or for 6 months and then collect all their money. So in terms of pips, they want to make very high amounts of pips, and they want to keep the risk extremely low. So it's that simple. So there's 4 types of traders. Anyone that's working, if you have a job, you need to stick either between being a swing trader or being an investor, because you can't afford to be in front of the computer. So these guys spend a lot of time in front of the computer because they're getting information every minute, every 5 minutes, every 15 minutes. All right. This guy's a bit better because he's getting information every 15, 30 and hourly. Right? What does that look like on the chart itself? So if I drop down to the 1 minute, everything looks the same. You know what I'm saying? Everything looks the same. So all I'm going to do to illustrate to you what the difference in terms of target is, this is the difference. So here we have a sell signal, and down here we've got a buy signal right there. All right. So I want to measure out, if I had to sell here and take all the money until this guy's got down here, how much would I have made in terms of pips? So this means I would have started selling from this guy. So let's put a line through him. So I would have started selling here, and I would have wanted to take my profit right there. So right here. Okay, now let's calculate the pips. So from here to there on the 1 minute, it took me 10.4 pips. So you can already see that if I'm trading on the 1 minute, I'm looking to make around 10.4 pips.
And how long did that trade take? From when it started to where it ended, it took, you see that number that says 29, the one on the far left, right? It's telling me that there's 27 candles from here to there. So this would be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, until we got there. So there was 27. So this took 27 minutes to happen. This took 27 minutes to happen. So this guy would have made this 10 pips in 27 minutes. But each and every candle here, what just happened there? Each and every candle here is representing a minute. Minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes. So each one here is a minute of time because we are on the 1 minute time frame. That's all it means. Okay? Each person here, each candlestick, I mean, is a minute long. So it took literally 27 minutes to make those 10 pips. Okay? So did I write it down here? Yes, 10.4 pips. Now let's go to the 5 minutes and kind of set up the exact same thing and see how much difference we would have made there. 5 minutes, hello. Okay, so this was not a trade on the 5 minutes. So let's find a trade on 5 minutes. Zoom out. Okay. So on the 5 minutes, I'm going to consider this guy together with this guy. Okay. So we're talking about this candle here. Hey, you started this whole thing. And all the way up to that guy. So it's this bad boy here. So up to there. So if I measure this out now on the 5 minutes, from here all the way up to here, it took 27 candles. Isn't this weird? So this one also took 27 candles, but now each candle here represents 5 minutes. So let me whip out the calculator there so I don't blunder with this math. So 5 minutes times 27 candles gives us 135. So if I divide that by 60 minutes, it means it took about 2 hours for this to happen. 2.5. So 2 hours and 15 minutes. That's how long it took. So in 2 hours 15 minutes, I made 14.8 pips. So you can already see with the same setup, with the same strategy, here I would have made 14.8. Short memory, right? 14.8 pips. Let's move on to the next one. So I want the same thing on the 15 minutes. All right. So I'm gonna look at this guy here together with this guy down here. All right, that means we're talking about, nope. So we're referring to this guy. Going on, all right, up to here. So this would have been the profit area. So this is where I would have stopped the trade. Now let's look at this. Now every candle here represents 15 minutes. So if I do this, measure from here to there, it gave us literally 44.1 pips. So same strategy, same pip, here would have been 44.1 pips made. Let's keep going. You can already see that the numbers are just going up and up. I'm gonna skip the 30 minutes. Or should I? Nah, I should probably do it. I just hate how long this is gonna take me. So on the 30 minutes, we've got this guy all the way up to this guy. Okay, so guys, this is just an example to prove that the same strategy on different time frames can give you different amounts of pips. So you don't need to compensate risk for pips. So if you have a lot of pips, then you don't need to risk a lot. You know, I mean, I can risk minimum to make the most. So with this one, I would have then made 65.9 pips out of that trade. 69.5. That's the 30 minutes. Let's look for the same setup on the 1 hour. I need one that's nice and sweet, this one here. So I'm gonna look at this one from there and up to there. So we're talking about this one is more clear to me. So I've used this guy. Okay, and I would have ran the trade all the way to this guy here. Thank you, buddy. So right down there. So in this trade, each candle here is an hour long. So this would have taken 44 hours to happen. And I made there 56.3 pips. 53.6 pips. 53.6 pips. Let's keep going and look for the same setup on the H4. All right, looks like we found it. This guy together with this guy. So I'm gonna put this on the break. So, yep, I agree with you. So you from here, all the way to this guy. So there we go. Now let's measure this. It's gonna be this to that. So that's 147, 1473, baby. That's 1473, right? So literally the numbers just jumped from 50s, 60s to hundreds now. So you can already see that these guys are looking to make a lot more pips. Same thing on the daily. Let's keep going. We need those that are nice and sweet. Straight to the point. Here's one right here. So we're gonna look at this guy and this guy. So it means I'm referring to this guy, and I took the profit right here. So in this trade that took 22 days, because we're on the daily time frame. So it took 22 days to make 46.51. 46.51. So that's 456.1. 465.1, I mean. Okay? So you can already see this is the same effort. This is the same strategy. Nothing has changed. We all applying the same strategy, but now we end up making more pips. The higher time frame we go, and we end up working less because this guy was making money for 22 days. The other guy was making money for 27 minutes. So would you like to be paid for 22 days straight, or would you like to be paid for 27 minutes? All right? this question also goes the opposite. Do you want to lose money over 22 days, or do you want to lose money over 27 minutes? All right, start asking yourself these questions. All right, let's go to the weekly. Hello, big boys. So this are your investors' time frames. They love this. They hit the trade once here and they done. So start the trade down here. So who we talking about? Who came out? Hello. So this guy was our trigger. From there, and they reached the highest point right over here. Okay, same strategy, same effort. Let me calculate how long that took them. Hey, who started this? Say it. Oh, it's this guy here. So there we go. So it took 45 weeks. Right? That's almost 7 months, if I'm not mistaken, or 8 months, because there's like 52 months in a year. I mean weeks. Oh, did I just say months? My God, sorry guys. Weeks. So it took it 45 weeks to pay you out. So this person has been he made one decision here, made one decision and has been earning money for 45 weeks, meaning his money is just growing over time. And this is one trade. Imagine if he just invested around 2,000 Rand here, could walk away with 10,000 Rand there. Deposit took 5,000 Rand here, would have walked away with at least about 40K here. Long term. It's crazy, right? So let's look at the pips. The pips get crazier though. Zuma is my president. I don't even know how to say that number. You guys wanna try? Psych, you can't say anything. You don't have mics, guys. So this is 2,575.7 pips. So it's 2577. 2575. 2575.7. Come on. So it's 2,575.7 pips. One trade, same strategy, nothing has changed. Let's go back to the big boys. Monthly come here. So it looks like the only example we literally have would be from this guy to that guy. So you up to here. Yeah, probably in 2000 or in 1999, no one was trading, but just for example's sake. Okay, so this was the guy that let us go. So your success trade would have started from this month and went on until somewhere around there. So this took, started here, 35 months. All right, what's 36 months? That's 3 years. So this took 3 years. This person has been making money for 3 years straight. Money has just been growing for 3 years. Okay, so usually the guys that trade these big time frames have a lot of money to begin with because they need less opportunities. They just need to put money somewhere where it'll grow over time. All right, so the pips there, we're looking at, okay, I need to write this one down. Where the hell is my pen?
Thank you so much. Thank you. So we're looking at 26, 28, 0.5. Okay, let's go to the Excel and write it down. So we made the 2628.5. So this pretty much looks like this one here. So you can already see scalpers don't have a lot of profits to be made in their strategy. So they usually have to compensate with a big lot size so that they can make enough money. Okay? And then when we look at the day traders, their pips are a bit higher, you know, but still under 100 pips. So this is still a short-term trade. So they're expecting to make money within a day or two. So these pips are possible within a day, as you've already seen me calculate. Okay? Swing traders are now having a bigger target. They're looking at anything between 50 to 400 pips. All right? Obviously, they're going to trade less and have less opportunities, but make money for longer. That's why we're saying pip is medium to high, risk is medium to low. Okay? Then of course you've got your investors here. Your investors are looking at big amounts of pips. I mean, already at the daily, they're running at around 400 pips targets, anything from 400 towards 2,000. Right? Am I clear with this? I'm also gonna send this, by the way. Is everyone with me here? Mr. President. All right, thank you so much. Thank you guys. So that's basically those types of traders. And this here are all the pips, average, right? They will fluctuate, but you can already see through example that the pip targets are very, very different. So here, their risks will be high because then they need to punch in big numbers to make the same amount of money that these guys can. So you can imagine if this guy was using a 0.01 up to there. So this would equal this times that times 10. So if this guy was using, give me 2 seconds, $1. So if this guy was using a 0.01 to trade, he would have made $1 on this trade or lost $1 on the trade. If this guy was trading, they would have made, excuse me there, let me just do some editing on this formula here. Okay, I want you guys to change. I don't want you to change. Dollar sign. What? You talk nonsense. Hang on my formula. B2. All right. Okay, that's actually right. So this one would make $1.48, and let's spread it out. This guy would make $4. This guy would make $6. This guy would make $5. This guy would make 14, 46, 270. 57, 262. Those are the amount of monies these guys would be making if they all use the same lot size. So you can already see that with 0.01, with someone that's trading as an investor or swinger, we're looking at much bigger profits than the guys that are trading the smaller. So if everyone here then had to use a 0.1, which is $1 per pip, it means this guy would make $10, this guy would make 14, 40, this guy would make 69, this guy would make 140, this guy would make 2,000. Same lot size, same strategy, same skill. They just spending more time in the market as it goes that way. And you get to make more money and risk less as you go this way. Okay? Let's go again. Let's look at the guys that
should have money that use a full standard lot. So I'm talking about the 0.01 here. So let's there we go. So we're talking about the 1.00 actually. This is a standard lot. So this means $10 a pip. So let's look how much they would have made respectively. So this guy would have made a nice $100 in a few minutes, or made around 100 and something, or $400. Great for you. As a day trader, you would have made anything between $400 to $500 with your decisions. If you're a swing trader, you've made anything between $500 to $4,000 on your one decision. As an investor, you'd have made anything between $4,000 to $26,000 for that one decision. This is what it means. This is why we're trading. Okay? So we're almost at 5:30, so we're gonna have like 30 minutes where we can have a little chat. Let me try and answer your questions, see what you guys didn't understand, what you actually got from this lesson. So yeah, I'm gonna save this and I'm gonna send it on Telegram. What do we call this? Types of investors? Types of traders. There we go. Chart setup. Chart research. So I'll send that later as well, so that you guys can work with this. All right, so automatically you already have a nice calculator down here for yourselves. So for those that can already see what's happening, so all you have to do is punch in your amount of pips, the lot size that you wanna use, and it will automatically give you plus minus how much you can make or lose. Let me resend that link. I sent it and I'm sure it moved all the way up there. Let me go find it for you guys. So there you go, that's the Telegram link. I just sent it on the chat. So everyone grab it, take it home. All right. So yeah, that was basically mostly what I wanted to talk about today before I start confusing anyone. So from here, you all have my WhatsApp number. You're all on my Telegram channel. So what I want you guys to do is, from everything you've learned today, start making questions, start building up questions. Because when I start my sessions, I want to talk about what I spoke about last week so that it feels as continuous as possible. Okay? As continuous as possible, so that we don't dwell on the same thing over and over. All right? So these classes are for every client that's in JP Markets. So as long as you're a JP Markets client, these classes are going to proceed for free for you. Okay? And the more active we are, the better the class will obviously become. And I do promise that as we go, I'll start recording the sessions. I will start recording them for you. I just didn't know that I had to record this session. Okay? So yeah, we'll keep on going. We'll keep on adding new stuff. So obviously I like to talk about certain topics, and every month I'll try not to repeat the topic. But in the next month, I'll need to repeat the topic for the new guys that are in there. So you guys better ask your questions and write them down and go practice so that you have all your questions answered now and quick. Are we clear? So I had expected that everyone would already have my numbers because I send out
what do you call this? I send out an email with my numbers as my signature. But what did I just do? All right, so I'm about to send the numbers to everybody. There you go. Is the recording available? Maybe. You never know. So guys, it's been a pleasure teaching you today. I hope this was helpful. And I want to build on next week on what we've spoken about. And in June, I'm going to start the process over again. So have those questions ready. I'm a very friendly person. I love voice notes. So if you're talking with me on Telegram or WhatsApp, just voice note me. It's a much faster process for me because you can imagine I'm answering about 20 people an hour. So yeah, so I talk a lot, but I don't mind talking about what I love, what makes me money, and what will make you money. Super Jamie, practice man, practice. Do you guys have any questions? May the markets be with you too, guys. So yeah, guys, this is for every JP Markets clients. So if you do have friends that you think would love this opportunity, just make sure you forward them my numbers so that we can start talking on WhatsApp, so that I can start linking them in and making sure that they go through the process of obtaining an account at JP Markets. Because later on, this is gonna start becoming more private and all that. So if you're not a JP Markets client, just make sure you open an account, deposit whatever you have, even if it's just $100, it's okay, no shame. We will start saving up towards a better account. Then keep trading the demo until you're ready. Then start your trading journey. All right, so let's keep the time going. So yes, on Telegram you realize that I did talk about the currency pairs that I'm about to open and what has happened with them. Okay, so on Telegram I uploaded the videos on Monday. So since Monday you can already see that a lot has happened. I was actually selling the USD CAD, made about 114 pips on it. It bounced back on this support and then went up again. All right, so here I'm infusing the RSI strategy with those trend line trading that I was telling you about. So every week I do have an update where I talk about what I'm seeing, what I'm thinking would happen in the market. And yes, I am not a god. I can't tell you for sure where the market is going, but I'm telling you, if you apply that 1:2 rule that I taught you, if you apply this, you'd always make it back on a loss and kill the market. So yes, we might not always be right, but with smart decisions, we can turn a bad situation into a beautiful situation. Okay, so that's the USD CAD. They still trapped in this area here. Let me see, back to daily. So they still trapped in this low zone here. So this is my big daily view of what's happening. This was the last day. So if I was in December 2018, I would have sold here and enjoyed all these pips here. Since then, on the daily chart, they've never been back in this or that. So I'm expecting that they'll go down into the oversold area once they reach this price here. So I'm assuming that if they break through this green line, they'll obviously break this black line as well that connects this support to that support to the next one, right? And then the market will then fall out and come to this area. So in the meantime, I'm looking at it on the 4 hours and I'm just making money in between. I mean, look at this range here. It's 140 range. So I'm gonna make 140 pips from here to there, make another 140 pips from there to there, right? So if I want the RSI to help me with this entries, you can see here, it never went in, it never went in, it never went in, right? So all I have to do is drop down to a smaller time frame. And you can see that this thing has been giving you opportunities on the 1 hour time frame, right? So this channel here, so this is like extra advanced stuff that I'm giving you right now. So just get used to it. All right, so I'm just talking, I'm showing you the psychology that I have within the market. So on 4 hours, I know that my last seller was here. So that's why I wrote our latest H4 bear, maintaining resistance so far. So this support is strong because it's fighting against this seller. So there's a bear here that keeps selling from this price. They love selling, sell, sell. My stop loss will always be here. You see, they've never touched my stop loss so far on the sells. So I'll be looking for sells anyway here, sell, sell. Then down here, they've made a support, a floor for themselves that I just threw out. And they just keep wanting to bounce from that, right? But here, the RSI is not helping me, it's useless. So all I have to do is go back to the 1 hour and voila, there's a trade. There's a trade. There's a trade. And there's a trade. And here where the dotted line is, I'm gonna keep selling because this guy has my back. He's the H4 bear, he's the seller. So that's all I'm saying here. And obviously RSI's got my back as well there. So that's how you would have traded this pair and made money through this technical analysis that I've already set up for you. Okay, so back to H4, keep it there. So I'm still waiting for them to crash all the way down so I can make all this money. So let me sell. Stop loss right there. Okay, so I'm expecting they'll keep going, so I'm gonna let it be. Then we spoke about Tesla. Right, so I'm just giving you like a insight of what happened over the week. So if you watch the videos on Telegram, that was Monday. Now this is today. Okay, so we looked at Tesla, and Tesla went below the 2018 low. Like they just keep falling, getting cheaper. When we were looking at it, it was still around 211. Right now the price is under 100. I mean under 200, so it's $196 per share. That's crazy cheap, man. So I'm saying here's my conclusion. I'm saying this market is oversold, baby. And where are the bulls? Why are the people not buying this? Isn't this cheap enough? This is extremely cheap. So all I have to do is wait for the RSI to move out of this area. I need it up here somewhere. As soon as that happens, I'm gonna try and buy them. All right, I'm gonna try and buy them and pull out my tool over there and try and make this money. Okay, so that's Tesla. I'm not in a trade here. I'm still waiting. I don't believe in selling companies. I buy companies. The stock I don't think Elon Musk is stupid. I don't think any CEO is stupid. So I buy shares, I don't sell them. So I wouldn't have been in this trade going down because I would never see Tesla going down. I would never see Facebook go down. So when it does happen and they go down, I get excited because I get to be able to become a buyer at some point. So somewhere here, as we're looking for the buyers above the 245 price, which is just here, I'm gonna buy. And if these guys give us a better price that's lower, I'm gonna buy there. Okay? That's how you read the signals. This is what it all means. And that's why I record this stuff and talk about it. We then spoke about oil. Ooh, they missed my take profit. This hurts. Look at that. Come on. No, I'm gonna move this stop loss lower. Guaranteed $40, $43 there. And by the time they close this, I'd have $54. All right. So on oil, I've been telling people like, listen, we're on a retest now, and there's a lot of resistance here, and I pointed that we're going that way, and we might even go all the way back to the 42. Okay, but without big speculations, we look at a lower time frame so that we see all the points where the market would basically start bouncing. So here I did literally what we call naked chart analysis, right? This is very advanced stuff. So yeah, this is a whole new level. We won't talk much about this, but if you go through my videos, it's still the same thing. I can just throw the RSI on it. There we go. And you could see the RSI was just tired, and it just wanted to sell from the daily. And I'm sure the 4 hours were feeling the same thing. Let me zoom in there. And they were selling. So that's what I'm talking about there. So go check out that video. And they fell, man. They're almost time to pay. It's time to pay. Pay us. GBP, NZD. I was buying these guys. All right, I made profit here. I tried to buy again and they just whooped my butt. I lost it. So right now it looks like they are selling. They took this. This was actually a pending order for me. So I'd be looking to take stop loss anywhere around there. So it's a $31 trade. So yeah, I'm expecting profit there. So I want to make at least $100 off that trade. Okay, then Bitcoin. So this is a crazy move, guys. This is a crazy move. I'm selling a market that's so aggressively going up. I even wrote there that they savage. They are savage bulls. So I'm selling it because my RSI told me to sell it here at 783 whatever. So this is what I call trusting your strategy with all that's within you. So my strategy is basically telling me that this guys will move from here and start moving downwards. So this happened. This was like a long time ago. So let me update my views about this currency. Okay, I need this guy. Okay, fine. There we go. Yeah, that's my new view on Bitcoin. Obviously, I'm looking to stop any damages at this point here. So it's a $95 trade, simple. And I'm looking to make anything around 15. So that's fair, 1:2, 5 for 14. So that's what I'm looking at, and it's very possible. So there's a lot of resistance here. Every time they try to come up here, they get pushed back down, and it looks like everything just blossomed from here. So I think they'll give the sellers a chance to breathe and then continue going up. So my overall with this one is to buy. And we back here. What about, is that NAS 100? Is that the Nasdaq? Nasdaq. Yep, there's the Nasdaq. So yeah, there's the Nasdaq. So you can see how much work it actually takes for me to get to a conclusion. So let's get the price going there. Give me a bad boy. There we go. You disappear. Okay, parameters. Right. So basically, the Nasdaq we've missed out the trade, right? So the last trade that happened was around the 13th of May. Let me see exactly. So literally 14th of May, Nasdaq came out of the oversold area, gave us a buy signal around this area here. I'm lying to you guys. Yeah, the signal came out here. All right. So we could have tried to buy this price. I mean, they gave us several opportunities. They went for it, they came down, gave us a chance to enter on this candle. Before they moved up, they came down, gave us another chance, and they went and gave us 2 times our profits. All right. Now, for as long as they are underneath this trend line, the sellers are in control of the market. Okay. If they break this line here, it means the buyers are in control of the market, all right? And that's what we want. So we want something like this. And get here, the buyers were controlling the market here, and they lost control here. And this trend line came into action. Now this line has the right to move the market down until they get to this line. Nothing is stopping them. They can turn wherever they want. So we're monitoring the sellers using this line. So selling anything here, by all means. That's what I'm saying. Okay. So right now we're waiting for the relative strength to give us an indication of times to sell. Okay. So right now we're back into the overbought area, meaning that if they come in here and they go back up, I want to start buying the market. Okay. So this was our previous buying area. So if you bought here, you would have made some money. Twice as much as the risk area is. Now, also, if they break out of this risk area, it means they've broken a resistance, a support. So this support would have failed to hold, right? So it's not too far-fetched to think that this market would actually want to continue going down. So all you have to monitor here is that as soon as it pulls back out, you're also out of that trade if you're selling, because then you should be in a buy trade from there on. Okay, so for now there is no signal. We missed the signal, so I'd rather wait for the RSI to come in like it should and pull back out. Then we might have another discussion on the Nasdaq. All right, but for now I'll save this one for you. I'll save it and also probably make a video as soon as I see something hot on the Nasdaq. I see you guys love the pips. Yeah, you love this big pip movers. Look at this thing. 27.43. So it's 2,743 pips in the same month. Really, this is crazy. Yeah, you guys love the pips. I see. Here, even if you use a 0.01, you're gonna make so much money you can't control it, you know. But if you're trading these big boys here, you better be able to trade and handle them. All right, so you better have a trading plan here. So yeah, that's my trade idea. For now, it looks like the market still wants to keep going, man. Nothing is stopping it. This is a bear market. Okay, so if you're trading the long term of it, you can sell anyway and make sure your stop loss is up here. Make it very hard for them. So you need to be able to afford. So let's see if I were to sell here. Up to there. Woo! Look at that. $300 as a stop loss. Madness. I'm not taking that. And that's 0.01, imagine. Imagine. You guys are crazy. You guys are crazy. So Nasdaq, let me save that, save profile, and there's the NAS 100. Thank you. So in the next videos, we'll have it. But for now, I'm still waiting for them to pull back out. I will try to buy them. And because they've moved closer to the trend line, you see, when they picked up from here, there was no trend line to begin with. Let me see. Was there? Yes, there was a trend line. There we go. So when they took this signal, their target was to break this blue trend line and just go up. And they created a new level for us to connect. So we're connecting this guy to that guy, and that's how we are monitoring the sellers. So our first seller was up here, which is basically the same thing as here. And this is our second seller here. So we've connected them, and if these guys want to take the market up, I mean, listen, we're on support here. So if they want to take it up, they can. They have every right. And if this guy goes, bah, so does my trigger. So does my trigger. I'm placing that 001, and I'm making those 3,000 pips or whatever you guys are trying to make here. Oh man. Come on, oil. Come on, oil. So yeah, guys, thank you so much. It's 6 o'clock. I hope we're all happy. I hope you're all on Telegram, and we'll touch base again next week. I have a beginners class on Tuesday, and then we'll make another advance on Thursday. Okay. So peace. It's your boy. I'm out of here, guys. Bye-bye.